Here's the butterfly team. This is what I set up in the very first seminar that we did. And I did it all with puts because a lot of times I do have a strategy that I've been doing for years and years in the SPX when I feel right, when it feels right. It's not like I do it every week in and week out. But I do feel in general that when we get past this election, it's going to free up the market. And what I feel like right now is that the VIX has a stranglehold on the market. Anytime we get a run up, there's a sell-off. There's a run to the S&P 500 index put options to buy some protection. And that ultimately is what drives the VIX, right? A lot of people don't necessarily know that the VIX index is really a function of the implied volatility premium in the S&P 500 index put options. And if you ever look at the S&P 500 index, you'll notice that there's almost always more open interest on the out-of-the-money puts than there are on the out-of-the-money call. I'd say 80% of the time that's the case, maybe even higher. But you know, you're going to find instances where that may not be the case in some markets. That would be a very bullish market. But bottom line is that that's why the VIX gets the fear index name in that. It's really the fact that the S&P 500 index is used by a lot of institutional investors and some retail investors to protect their portfolios. So when people are willing to pay up for protection, that will increase overall the VIX index because that means they're willing, that implied volatility is raising on those option contracts. Okay, so started with a standard put butterfly, also looked at a modified put butterfly and a skip strike put butterfly. Okay, so today what we're going to do is you can roll into either one of these, and this is the main reason why I have this slide. But I'm just going to roll into a standard butterfly, but we're going to be on the call side of things. Now, my seminar that I did on puts was all about, or that I did on butterflies was all about puts, but the same concepts apply on the call side of things. All right, so broken wing and skip strike are the same. They are. I don't like skip strike, or I don't like broken wing, and here's why. Here's a broken wing, and I do think that I should address this. Now, I wrote a little book called the Options Playbook. I think it's right over there. I don't know if you can see it in the screen or so. And I chose to call it a skip strike butterfly because you're literally skipping a strike. You're embedding a short call spread into the butterfly that pays for the butterfly. And I always look at a skip strike butterfly as an alternative to a short spread, not as an alternative to a butterfly. So you're right in that it's a modified butterfly, and that's probably the more used search term, but I think the skip strike is the correct name. And so I'm going to go with that. And from here on out, it's called a skip strike butterfly, not a modified butterfly.